Good afternoon, traders. Welcome to the final webinar for this week. I hope you all enjoyed the webinars for the past 4 days, and I've been getting very, very good response. Thank you for that. That most people have changed their style. They have seen their mistakes. They have learned some things, and that is great. I've also got a few old trolls coming back at me because I keep repeating the same thing. If you're paying somebody a monthly subscription, stop doing it. I will repeat it in all of my webinar. If you're doing that, stop doing it. Of course, the people who are collecting your monthly subscription are not very happy about me saying it. So they will create, they will create different, they'll open new logs on TradingView and they'll come at me in full swing, right? They'll come to troll the charts and say whatever they have to say well, he knows nothing what he's talking about. You guys should continue paying me my monthly subscription. You should not. Especially if you're going to pay somebody $500 to $1,000 to teach you support and resistance or basic stuff like that you can get on the internet, you don't need to do it. You should spend the first year of your trading career when you decide you're going to become a trader. Spend the first year of that time learning, researching, going into the internet, watching all the free webinars you can get. Sarge, go to babypip.com, go to elliottwave.com, read that book, read a few more books if you want and you have the time, right? Do all the research you can get and then condense them, filter that out. What works, what doesn't work, right? You can demo trade them while you're doing that, right? Oh, it's Chinese New Year's. Happy Chinese New Year's to everybody too, right? Those who celebrate. So basically, you should do all that within your first year. And at the same time, you're also getting used to the cycles in the chart. So that kind of help you to make, if after the first year you're already knowledgeable, you can make a decision. You can make an educated decision whether you want to be a trader. And if you want to be a trader, what you need to do to become a successful trader. Anybody who's telling you, hey, it's better if you're in my room and you haven't learned anything, what he's trying to say to you is, give me your money, I'll teach you a few basic stuff and I'll take your money and send you away. Most of them don't have a room where they keep you there forever. And there's a good reason why they don't do that, because here's the thing. The guy who I studied with didn't want me to stick around very long, because just as I got into my second month, I start asking questions that are not, that are very bothering to him, because and the longer I stayed, it's not so good for him. So you have to pay to stay there, right? So you have to pay $200 a month subscription to stay with him. I didn't stay there. As soon as my 6 months is up, I'm gone, right? But I paid $5,000 to learn nothing. Well, maybe a little. I learned that support and resistance exist and it doesn't work. And that's the whole concept. When I wanted to learn Elliott wave theory, I wrote one very popular Elliott wave, I wouldn't name the name, subscription place. And I said, here, I would pay you any fee you ask me, but I don't want you to send me a set of videos. I've seen those videos and I know this stuff. I know everything. I've read the book. I'm pretty good at it. The theory, I can tell you everything. I want you to watch me do it practically and tell me where I'm going wrong and why. And their fee, I think, is about $600-700 for a set of videos and $1,000 for a next set of videos and $1,500 for a next set of videos. And I was like, here, I would pay you up to $5,000 just to do that with me. And they refused to do it. I refused to take the course because there's nowhere a set of videos will make me a trader. Nowhere. There's nowhere you will ever become a trader by looking at a set of videos. Just knock it off. If you're buying a set of videos from anybody, you can forget about it. You will never, ever learn to trade. Right? If you guys keep your question to the end, we'll answer them. Don't worry. So support and resistance is just like Elliott. Those who don't know what lines to draw or think it's based. Well, here's the thing with Elliott wave. You don't have to need to know what line to draw. Those lines, how many times I've said the lines are pretty much useless. The lines is just an indicator, but if you want to trade support and resistance, you're welcome to do so. Support and resistance is easy. It's where it's stopped and it's bouncing. Where it's stopped and it's bouncing is where it's find support or it's find resistance. And that does not work. But hey, I'm just doing the webinars to educate you. And if anybody refused to take the education, great, be my guest, go trade it. It's your money, not mine, right? You will learn, just that you will learn the very hard way. I got a letter from a guy today who was trading support and resistance for 4 years. I don't know if he's in the room today, but I read his letter. He's been doing that for 4 years. And finally, he decided it's time to stop it. And he paid to learn it. I got a letter from another guy who paid $3,000 to learn advanced patterns. And finally, he stopped doing it. I get these letters daily, every single day, right? It's not like I don't get them. I get them every day. And these are from people who paid to learn these stuff. And they have stopped. So let's go and do today's topic. Let's go and do today's topic. Today's topic is about wave theory. I think all of you want to know it. And I always start with the basic stuff. What is the concept behind the theory? There is always what is the concept behind support and resistance? The idea that let's do this. We're gonna do fast review of the week, and then I'll go into this so you guys will have an idea what we did here for the whole week. So let me grab my drawing tool. And this is it. The concept behind support and resistance is that at some point in the chart, it will find resistance as it's going up. It will find resistance. It will find resistance. And when it do break the resistance, that will become support. And I told you this and I've shown you this, that it doesn't work because that's not what the chart is actually doing. That is not what it's doing. So that doesn't work, right? I've shown you that. That's the concept behind it. Forget about that concept. The concept behind pin bar is that if you have a strong wick, that there are huge sellers coming into the upside, or if you have a strong wick from the downside, there are buyers coming in. So the bulls and the bears are running at you, and suddenly you have to go in the opposite direction. That does not work. I showed you many of those that continue to go in the same direction the trade is going. Forget about that. The concept about wave patterns, the concept about the advanced pattern is that the chart will make a basic 1, 2, 3 corrections. And I showed you that sometimes that is true. More than 60% of the time, that is not true. I've shown you that in the chart because the wave patterns are not as simple as a 3-wave structure. And I showed you in the chart. Sometimes they're 5-wave structures. They're much more complicated than that. And I can show you one chart that you may have to remember for the rest of your life. And this will make you know that the advanced pattern doesn't work. So you can go to PUNCAD, go to the weekly and PUNCAD, and you're going to look at this correction. This was a corrective structure by all means. If you don't know anything about corrective structure, that was a corrective structure. That thing took 3 years before this happened. But that did not change the structure. But on your advanced pattern, you'd be hell of a what the hell happened here, right? Why isn't it going? You would put the first one and you'll put a second one. You would put one like this. You'll draw one like this. That one doesn't go. You will draw one like this, something like this. That one doesn't go. You will come back and draw one like this. And that one don't. When you're going to end up drawing about 50 of them that didn't go. That is why. It's not that they don't work. All of them don't work. It's a percentage of them work, and the percentage is less than 50. So you don't want to use it. You have to go and test it yourself. And if you find that it works more, congratulations, go ahead, use it. But I can tell you from people who are using it, and you can go into anybody who you think is the best advanced pattern person trading, look at 100 of his charts. Take 100 of his charts, not 1 and 2. Go take the last 100 of his charts. And you will have a percentage, how much of them actually worked that you could have traded, right? How much of them you could have actually traded, how much won, how much lost. And you would see why it's not working, right? Because it will work sometimes. Like if you have a perfect 3-wave structure, correction and ABC, perfect, it will work. If you have a complex WXY, it's not gonna work. It's simply not gonna work. I'm not talking about even you have a very complex WXYXZ pattern. That is totally out of the way, right? It's definitely not gonna work. So why that doesn't work, you understand. So the next thing I talk about moving average, I showed you where moving average will lag, especially when you're in the corrective structure. And you had a moving average going in here, you will never get this move. By the time the moving average is calculating, trying to change or to cross over or whatever, this move will be over. Your moving average will cross over somewhere here. And the move is over. That's when the moving average will be able to calculate that the market starts to move fast because it's an average. And while it's in here, the average is very low. Anytime you go into consolidation, the average will be low. It will take a whole while. It'll take 10 candles, 20 candles, depends on what period you're using, to get that to calculate higher rates to go, because the impulse will have to start and go. And by the time it's ready to calculate, the impulse is completed. Right? So today's topic is wave analysis. Does that work? Here's the question. I've tried all those things before and they didn't work for me. So is wave pattern something that can work for you? Because it's working for me. This is where I stopped. Remember, if support and resistance was working, that is where I would have stopped. I wouldn't pay $5,000 to learn that stuff and then throw it away, right? That is where I would have stopped and I would have been trading. But I didn't stop there because it didn't work. And then I went and I studied Elliott wave. It didn't work the first time for me wrong, right? It didn't work the second time wrong for me. It took something amazing happen for it to work for me. And that is for me to find a way to isolate and identify what is a single wave. And something you will not get anywhere else from any wave trader, because that is something that I only got. So if you heard about it anywhere, somebody say anything about that, it's got to be somebody who learned it from me, because it was never anywhere in the world. How to isolate and identify a single wave. Now, let me explain to you what is the concept behind wave theory. If you read the Elliott wave book, and I hope all of you have done that, the concept they will tell you is that the market moves psychologically. The market moves in waves. I think everybody agrees with that. That's not something we will argue over because we can see it, right? You don't have to argue whether the market moves in waves. Anybody say it doesn't move in waves, you can just tell them, okay, thank you, goodbye. You can actually see it, right? You don't need to do anything. You can just look at the market and you can see the waves moving, right? We can literally see it. And if we can see something, you may as well believe it because it's in front of your eyes, right? So if it's in front of, what is that? You guys may want to keep your chat for afterwards, right? Because we can't do both at the same time, right? So here is the idea. The market does moves in waves. So those waves, as you may call them, I call them impulse. It's actually in the Elliott wave book. It's an impulsive move and a corrective move. The corrective move will go against the trend and then it will continue in the direction of the trend. I've showed you this basic concept, right? That is basic concept of the market. That's how it moves. It trends up, it trends down, but in each of the trend, you will find these structures within. You'll find a move up, a correction, a move up, a correction, a move up. Basically, then you find a move down, a correction, a move down, a correction. Basically, that's the whole idea. Now, how do you know when one of these patterns are going to over or not, right? Basically, that's everybody's question, right? How do you know that? And that is where the concept comes in. What Elliott did, we're talking about Elliott wave, not just wave theory. What Elliott did was that he went and he studied the charts and he studied those corrective structures and he identified a huge number of patterns, not very huge, I would say 13, somewhere around there, number of patterns that he has seen in the chart that repeats themselves. In short, I will tell you some of them because all of you know. He identified flats. There are 3 types of flats. He identified triangles. There are about 3 types of triangles: expanding, contracting, and barrier triangles. Running flats, regular flats. We call one contracting. There are 2 types of regular flat. The one where the C doesn't break there, we call it contracting, but it's okay. You can say regular flats, running flats, and expanding flats, right? And he has identified those diagonals, which are actually an impulsive wave, but you see them sometimes in the corrective structure. Those are kind of the patterns you need to remember, basically, right? Zigzags is hard for you to identify, so I would not go into zigzags because zigzags are actually very impulsive, right? They'll make a correction, they'll go impulsive. So zigzag pattern, you don't need to identify as such as a corrective structure. It will be a part of a corrective structure. It will be one part of a bigger corrective structure. A very sharp move up, which will be an A wave, or a very sharp C wave. But as itself isolated, you don't really need to know that because you can be trading that zigzag pattern, right? The ones you really need to know where you will have that sideways consolidation would be the triangles and the flats. So you need to know those very well, right? You read the book, Learn all the patterns, remember all the names, remember the structure. That is what you need to do anyway if you're going to ever take if you're ever going to join my group. You need to know that stuff. Those are the basic stuff about Elliott Wave. We are not going to charge you to do that because it's free. That's what you should need to do. Go learn it, read it up, and come back, right? Basically. So what do we do? How does this thing work? The question is, how does this concept work? Or why does this concept work if the others don't work? And it's simple. It's as simple as you could ever believe. Think of yourself as the guy working in a bank. Think of yourself as a bank. You own the bank, right? Your clients are either going to be buying or selling a currency. So at any one time you go to the bank, they will do any trades for you. They will do any of the transactions for you. They'll buy or they sell. But if the market makes a move, let's say something happened in the world and the market makes a move away, a very sharp move away to the downside, what is going to happen is that the market will reach an area where they think that price is pretty much stable. There are enough people who are willing to buy this thing back at that price if it was selling off, like the Pong was selling off. And at this price, people are saying, okay, we can start buying Pong now. So the market will meet that area where there are orders coming in to buy. Nobody wanted to buy it before because they're afraid of it. But now everybody is comfortable to buy it. And the buying and the selling will start. And as long as the market is going to have buy and sell transactions, it's going to stay into consolidation. Which means people are willing to buy and sell to do business with the Pong at that price. Everybody was comfortable. But at some point of that comfort zone, there are going to be a huge order coming in, either to buy or either to sell. That will break the concept. That will either make it totally go up or totally go down. So what you need to know about these structures, when you learn all of them, which one of those corrective structures, which one of those structures that you've learned will probably show you that the market is totally going up or the market is totally going down. That is all. That is how simple it is. You will go study those structures, and as you look at those structures, you will make a decision. Remember, we're using the Pong, so let's go back to the Pong. Yep. When you study this market and you're looking at the structure, remember the market made a very big move down. And then it goes into that comfort zone where people are willing to buy and sell, buy and sell, buy and sell, buy and sell. But at some part, this will form, well, while all of this is happening, it will form a corrective structure. It's not about ABC and WXY. It's about what the market is doing. The market will make a structure because it doesn't matter how it goes, it's going to make a structure. And those structures that the market make repeats themselves. You can actually identify them. You can see them. Because it's people doing transactions daily, right? So they repeat themselves. They do transactions daily. They do transactions weekly. It's like you get your salary at the end of the month, right? That doesn't change. That means the company who's paying you will need money at the end of the month, and they will be doing their basic transaction the same ways. It's the same thing. But those activities are actually creating a pattern. And that pattern repeats itself. So what you have to do is go and learn this pattern. And when you know that pattern, when you learn it and you can identify it correctly, this is where the problem comes in with traders. Ability to see and identify those patterns correctly because they don't have rules. They don't know them so well. They can't identify them correctly. And that is where, if you want to do that, you need a good coach. That is where, if you're really serious about learning that, you will still need the help, because I've had a lot of people who tried a lot of things and they still come to me and then they start seeing it clearly, right? That is what, and once you understand what that pattern is telling you, you can make a forecast for this move. So anybody ask me how I made my forecast for exactly at this point that it's coming down to break the low? That is how. Because you need to know, when will this pattern complete itself? Is it here? Is it here? Is it here? Or is it here? When is this pattern going to complete itself? Is it a complete pattern? Is it not? And that is the biggest problem with most Elliott waivers, most wave trading people. They have no idea when it's going to complete. We have a certain idea when and how long it takes to complete. We need to see a complete pattern. A very good example for most of you today was the New Zealand. When we saw this, let's go to the 1 hour, right in here. And if you go to the 15-minute, Remember when it broke? I saw some of the traders put this and they said, oh, we're selling. A few new traders in my room say, oh, it looks good. It's like a break. I'm going to sell. And then our traders said, no. I came in the room and said, nope, nope, nope. It's going up back, guys. Don't even fool yourself. That's going up back. Because it's an incomplete pattern. So the likelihood of that going up back is very, very great. When you understand that the pattern is incomplete, you know what it should look like. You know when the pattern is going to break. That is when you can make those accurate forecasts, because you know it is still in consolidation and it's probably still going to be there for a while. You have to study the patterns, and when you study them and you understand the patterns, the concept works great, because the patterns are not themselves creating in the chart. The activities of the traders, and by traders I don't mean us. We are not traders in that sense. We are just speculators in that sense. The traders of the market, the big companies, the huge companies that are doing billions of dollars of transaction, the huge banks, the hedge funds, the insurance, the different insurance pension funds and all of those, the very big volume of trade that is happening. When those trades are happening, they will create this pattern. When you go in there, they will create this pattern. And you would look at this chart and then you would say, you know what, I think I have an idea what pattern they're creating. Every now and then, once in a while, you will get it wrong. You're too early in assuming that the pattern is over. Like once I assumed that this pattern is going to go down because I thought this was all. Here, see that one there? We thought we were going for a sell here and this sell was going to go down. Well, we actually got a break even there and that was okay. Some of my traders even made some money in that one, on this one coming down, because we thought that's it, that this is enough of a consolidation to go. And we were wrong about it. It went back. We sold it again. We thought it's going to come here and go down back. We sold this again. That was a break even. And then finally, we saw that it became a more complex pattern. And that is when I said, okay, this complex pattern behaves this way. I can go and click on not many of them and show you that. This complex pattern has to behave a certain way, which means that the transactions that they're doing right now will create this pattern. It's not the pattern itself has to happen, it's that the transactions they're doing will likely create this pattern, because we have seen this before. This is what they're doing now, and because of what they are doing now, we will see this in the chart. It's not the chart that is dominant. It's what you see in the chart you're reading. It's not about they're going to make an ABC. It's what they're doing will create a pattern that you will name ABC. You can name it anything you want. The name is irrelevant. The relevance is the structure you're looking at. And unless you get that concept into your head clearly, you will never ever learn what's happening. People, oh, well, Elliott wave doesn't work, because why would Elliott wave work? Why would they go and make waves? They're not making waves. That's the dumbest thing I've heard anybody said, and I've heard a lot of people said that. They're not making waves. That's not the purpose of it. Your heart does not create a certain, your heart is not specifically beating to make, some kind of chart on the cardiogram to show your doctor what is. When something happens to your heart, then the cardiogram reflects that by the pattern that is drawn on the cardiogram. It's not your heart drawing patterns. It's the reflection of what is there. When something is happening somewhere on the earth, right? The seismograph will show it. You will see that. It's going to show up. They're going to have irregularities and they're going to see it. And then they read into that irregularity and say, you know what? Somewhere in the Pacific Ocean, we're seeing this very irregular movement. And when we see irregular movement like that, we are expecting an earthquake. And then they will measure the earthquake and then tell you, well, this looks like it's going to be a powerful one, or this is not going to be such a powerful one. Because they're looking for irregularities in the chart pattern. And they can read into them. And that's exactly what we do. We look at the activities of the people in the market as patterns on the chart. And then we look for the pattern it's creating. And we can tell you by that pattern what they're likely going to do, what is likely going to happen in the market. Right? That's what we do. That is that easy. right? It's not difficult. It's not complex. It's not based on some fancy theory. It's based on a simple theory that you're charting the movements of money as it's changing hands in the market, and by that you can see, right? Are they changing hands fast? Are they changing hands slow? Are they creating a triangular pattern where they're changing hands? Momentum is dying out. That means what? And if you know what that means, and if you know what the next stage is going to be, you can make perfect forecasts like these, because you know what this should come up with. Once in a while you may be wrong, maybe. Once in a while you'll get it wrong, because you look at the activities and they look perfect to do what you think it's going to do, and then something else changed in the structure. And then you saw that afterwards and you said, okay guys, we're not in that trade because it didn't do what we expected to do. Forget about that forecast. And if that happens, you're not in the trade. You don't have to worry. You don't lose on it. But if it does what you think it is going to do, and it does that 90% of the time, you will be in the trade and you will make money. That's it. That's how simple the concept is. That's what it's based on. It's not based on some funny thing happening in the world. Nothing funny is happening. And you know what we talk about? Some people say, well, is speculation going to spoil that? No, speculation is part of that activity. Is the central bank changing that? No, they're part of that activity. Their activity is part of what you see in the charts. Whether it's speculation, whether it's fundamental movement, whether it's somebody doing some crazy, it doesn't matter what. Those are all the activities put together, making a certain pattern. And based on that pattern, you can make a very good decision what it's going to do. You can go on the pung, and one day before the biggest news you're going to hear in England about a Brexit, and you can make a forecast as to where this is going to go based on the pattern. One day, see, wave count one day before. That's the wave count one day before. Wave count one day before the big day. And you can look at the pattern, and the pattern is telling you what activities they're doing. And when you look at that, you know what they're prepared to do simply by looking at what they're doing now. That is why you can make that forecast with such accuracy, that it's going to go down. Simple. Because you know what they're doing. You've seen that structure before, and you know that when you see the structure, regardless of what they name it, Brexit or something else, or FOMC or whatever they name that specific moment that they're ready to do it, they will use that moment. The reason they have so much news event is that they will use those news event to move the market. Those are the moments when the market moves. It's not moving because of those moments, but it's moving on those moments. And most of the time, or very often, you see them move against what the news is, right? Let me explain something to you guys. If they had stayed in Europe, if they had not exit, it will still fall. And you know what the explanation will be? Oh, the pound is strong, but the euro is weak, and we stayed in. That is why it's falling. That would be the exact explanation they'd go. That, oh, they didn't exit, and that is why it's falling. Look at the pound is falling because euro is weak, and the euro is dragging the pound down, blah, 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 blah. It didn't matter what happened that day. It really didn't matter whether they exit or they didn't exit. That was going to fall. That structure told you it was going to go down, regardless of what was the outcome of the election. You can blame it on the outcome of the election, but it has nothing to do with it. Because if they've done the opposite, you would still fall. And they would explain it with the same explanation. That the euro is weak and we remain in the euro, and people didn't like that, the market doesn't like that, and the market decides it's going to go down. That is what all the gurus who are paid to talk will talk, because they're paid to talk something. And they have to explain it afterwards. After the fact, they have to explain what happened, and they will find enough reason to say why. So FOMC come out, negative for the dollar. The dollar takes off like a rocket. Everybody said, oh, well, it's negative for the dollar, but the market doesn't believe it. The sentiment is different. Oh, excuse me? I thought the negative is supposed to go down. Why is it going up? You look at the structure and you can see that it was going to go up. That's the point. And you get it right 90% of the time. That's the whole thing. Right? You get it right 90% of the time. You don't get it wrong. You get it right 90% of the time. Go look at the charts. Go look at them. You will see it's not one, it's not two. You get it right 90% of the time. Was that a sell setup? I'm doing it in charts you guys asked me to show you. Was that a sell setup by any means? See? You get it right 90% of the time. That is the thing, because you can see the structure is already there for you to read into. And while this one was falling, we were looking for it to go up. Yeah, but we're not trading today, right? I know the news is out, but we're not trading right now. So that is the thing, guys. You can see it. You have to learn how to read into the structures. Now, it's not that easy as you may think. And you can probably do it on your own if you spend the next year or two doing it, right? Or you can make it faster than that and make much more money within the next 2 years. That is going to worth you doing something else. Not waiting 2 years to learn it, but learn it faster and make more money within the next 2 years. Right? That is what it is. It's rarely about the news event. Don't let that news event fool you. That news event that you're hearing on the internet and Bloomberg TV and for that is coming out, those are for actually, the public. They are not the truth. They're for the public. We will never get the true inside news of what's happening. No one is going to give it to you. You watch Bloomberg News, you watch CNBC, you watch all those things, you read all the sites on the internet. You're not going to get the real stuff. You will never get it. So stop fooling yourself that you, especially when I see people in TradingView write a whole history under their chart as to why they think this is going to go up. And they write a very long thing of what this person is going to say and what that person is going to do and how the market will react to all of that. And I'm like, holy what? Where did you guys get that out from now? Did you just had a bad dream and wake up and decide to start write it? Because when you're writing, it sounds like you are the CIA and the KGB together, knowing everything, right? Because you will never know it. And this is a guy behind his computer sitting at his desk and, drinking his coffee and chewing away at something and thinks he knows what's happening in the world, right? I used to look at them and say, what's wrong with these guys? Like, seriously, why would they go write that nonsense under the chart? Like, they know what's going to happen. They have the news event and they know exactly what this person is going to say and they know how the market is going to react to it. And like, it's crazy, right? It has to be crazy because you know nothing. You actually know nothing. You're writing some guest stuff on there. Just go do what you know. It's even better for you to put support and resistance than to write those nonsense. Although it might not work, but it's better. You have a higher chance of it working than for you writing those nonsense explaining why you think it's going to work or not. Right? It's actually that. So here is what wave theory is about. That is the concept, and that is why it works. Now, some people have come to me and say, well, I like the wave theory, but I like to use it with this and use it with that. I'm like, well, you don't need to. It means you don't know it that well. If you think you want to use it with advanced patterns, or you want to use it with this, or it means you haven't learned it well enough. Because when you learn it good enough, you wouldn't need all of that. Right? You really wouldn't need all of that when you learn it really good. Because you can see the patterns clearly. You can literally see them clearly. That means you don't need to. That's the whole point. That's the whole thing about the theory. It's not as complicated as people think. So you really have to learn it really good. Now, it is not easy. Let me make this very clear to you. It is not as easy as I make it look now. You will get one hell trying to figure out what pattern is in that chart once I pull everything out of the chart. And if I take a chart, let me go take a chart give me a chart that I don't have on here. Give me some crazy chart that I don't have here. Anybody, just type a chart that you think I don't have on here. Let's go look at it. Okay, NOK yen. I like that one. I don't have it. What is it? NOK. Am I correct? We got so much. Euro NOK yen. NOK JPY. I've never seen that one, I think, right? NOK JPY. Is that correct? Yep. Norwegian yen. I don't think I've ever seen that before. And let's go get it now. Put it in the daily. I think by now most of you can tell me, but if you go in the higher time frame weekly, and you tell me where you think it's going to go now, and that is where the trouble starts. We're in the weekly. Let's make some wild guess. Anybody says up, anybody says down. Let's see. Down, down, down. You see, consolidation, down, down, up. We got, you see, that's the thing. You got up, you got down, and you got sideways. We have all three answers, right? So that is why I'm trying to tell you, it's not as easy as it may look. It is not that easy. So just to show you guys that it's not that easy, but I could look at it and I could tell you where it's going, right? But I would leave that for you guys to go and do some work. I'm not going to give you everything that easy, right? I'm not going to make your life so easy. So you guys go do work, because here is what you have to tell yourself. Let me tell you what, let me just give you some clues where you'll have to look at. You have to tell me, what is this pattern? And if you don't know what is the pattern you're looking at, you will have no idea whether it's going to go up or down. That is how easy it is. You have to name that pattern. Tell me exactly what pattern you're expecting this thing to make. And if you don't know that, forget about, don't try to guess now. You guys forget about trying to guess now, right? Forget about it, because that is how you're going to know where it's going to go, right? By knowing what you're looking for in the charts. And that is where you will know whether people know pattern. I know there's some guys trying to copy my charts. They're going to do things like this, and they're going to put the line like this. We have guys like that making charts. By the way, if you see somebody with that wave name in their chart, in their name, you got to be careful of it. The wave pros and the wave experts and the wave whatever and the wave whatever, just be careful. I'm not saying they don't know what they're doing. I'm telling you, be careful. Anybody with waves in their name, probably trying to draw attention that they know what they're talking about, right? They'll put all these lines, and then they'll put the line like this, and then they'll put another line like this, you know, like, and they'll tell you, oh, well, watch this. If it breaks this or if it does that, it's going to change. I'm looking at it and said, wow. Because all of that doesn't make any sense. All of that together makes no sense. If you look at all of that together, it's actually, they think that I just put lines and it worked good, so they're going to put lines. It should work good. It's not about the lines. Let me repeat it again to you. It's about the pattern. The line is only to identify the pattern for me. So the first thing you have to know is you have to know the pattern, not the lines. So if you know the patterns, then you're going to put your lines correctly, right? No, that was being honest. That was actually being honest, because I've looked at many of those charts and I've seen that, oh no. And you know what? I can tell you something, Dennis. People will get fooled in this market. A lot of people will get fooled in the market. So sometimes you've got, it's not about that. Sometimes you've got to let people know what is true in the market, right? So here's the thing. If you want to follow somebody, anybody, you have a right to do that. Go take 100 of their charts and check it. You should do that. All of you should do that to me. Start with me. Go take 100 of my charts and check it before you follow me. You will have to decide that this guy is going to bring value to you or not. It's for anybody you want to follow. Start with me. Let me say start with me. I'm the first one. Start with me. If you're following me in TradingView, go check 100 of my charts. And then do that for everybody else you follow. I couldn't be more honest about that. That is what you need to do. All of you should do that. Because if you don't do that, you're going to fall trap to things that people hyped to you. And when you put a certain thing in your name, you're hyping something. You're creating an impression that you know about it. That's the whole thing. You don't need to create. You need to do it and let it be seen in the chart. That's what you know, when I came to TradingView, there was no waivers there. Nobody spoke about wave. Nobody talked about wave. Nobody even talked about Elliott wave as such, much as wave. Everybody was trading animal. You go back 2 years and check. Everybody was trading animals. And then I came and said, guys, you got to start looking at waves. You got to start looking at the wave structure and the wave patterns. And then I noticed a lot of waivers came in the market. From where? I have no idea. Right? That is what I'm trying to protect you from. Just don't go do it. You go and take 100 of any charts. Take mine. Start with mine. You should start with me if you're following me. And then you should move on to anybody else you follow. Is that value for you? That is what you need to do. Because remember, Trading can create a bias. If everything you hear and everything you see will create a bias in you. Let me put it this way. You want me to show you that this chart could go up? I'll create a bias with all of you that the chart is going to go up. Are we looking for upside on this chart? If you look at this chart right now that I put that one line, what you're thinking? Oh, it's going up, right? You want me to change that bias? What you're looking for now? Tell me what all of you are looking for now. You're looking for the chart to go down. One single line just changed everything you thought you knew about the chart. A single line could change every single thing you thought. So when I said be careful of people just putting lines all over the chart, this is what I'm talking about. It's not about the line. It's about the pattern you're looking for. Let me repeat that to every one of you. It is about the pattern you're looking for. The line has zero value. When I post a chart, it's because I've seen a certain pattern. And the line is just to indicate to you where that pattern is going to start to form for the next move. So when I post the Aussie chart or when I post the New Zealand chart, let's go take some of my charts. How do let me open a new one, Trading View. And let's go. Let's start with me, right? So let's take this chart, for example. Start with the last chart I post, right? When I post this chart, what I'm looking for is a complete pattern. I'm telling you that I see this pattern, a known pattern in the market and the way this pattern behaves. And this pattern, if it comes here and break this structure, you can get this trade. I am almost 90% sure it's going to do that. Now, the 1 in 10 is going to break out. If it break out, remember what I always said, wait for this before you buy. Let's take another one. Let's take this one, for example. That's the next one I posted. All of you were here with me since Monday morning, right? Anybody here in the room who hasn't been Monday with me here? Type a Y if you haven't been here with me Monday. Okay, we got a couple. Remember when it was here and what I said? We're not, I think it was somewhere here, and I said, guys, we're not looking for the buy so much. We're looking for the sell opportunity. We looked at this chart and we said, we're not looking for a buy. We're looking for a sell opportunity. Did I say buy it anytime during the week? I said, no, we are looking for a sell opportunity. There's a specific reason why we are looking for a sell opportunity. Never did I say buy this. If it was going up and I said, no, we're looking for a sell. And there's a reason why we're looking for a sell, because we saw a specific structure. Right now, no. Right now, you will have to wait for it to make a flag under the trend line. And if it does that, you will get it, right? Let's take another one. Let's take this one, the New Zealand. Remember what I said to you guys? We're going, right? This is the third one. Let's go. New Zealand. Remember what I said to you guys when we came in Monday? It was here. And I said, guys, it could go up and it could go up. It could go up some more. 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 I'm not interested in the buy. It did go up, right? It go up for 3 days. I said, I'm not interested in the buy. That's it. Full stop. I'm interested in that sell. And some of my traders got it from the very top. Let's go look at that. Some of my traders got it from the very top. Some of my traders got in there from the very top and they're still in that trade. If they took it off, good for them, because now you're going to get a second trade coming like this. Now you have a second trade set up in play. If they break this trend line, you have a perfect trade to sell. If you know how to do it, if you have a strategy to do it. Did I say when you came with me Monday, where was Monday? Monday was the 23rd, right? That was somewhere here. See, 23rd was somewhere here. Did I say we were interested in the buy? No, I said this could go up and it could go up and it could go up. No buys. We're interested in the sell. And it is a good reason why we're interested in the sell. because of the structure, not because of any of the lines on the chart you're looking at. Forget about the lines. It's because of the structure, right? That's what I'm saying. And I showed you why people just putting random lines in their chart are going to mislead you because of this. I just actually show you two charts that got you confused to hell. One show you an upside, one show you a downside. And if you don't know patterns, you're going to fall trapped to that. See? If you don't know patterns, Pong, definitely we were looking for the Pong to come down. We're looking for this on the Pong. Remember when you joined me, I said, the Pong will go up. Let me come. I said, we're not buying the Pong either. Although it's what's going up. If you buy the Pong, I said, if you buy that Pong, it's a very, very short trade. You were here Monday, and I said, if you buy this or if you buy that, this is a very, I think it was here Monday, right? 23rd, somewhere here, 23rd. If you buy that or if you buy this, is a very, very short trade. You take your profit and get out because it is likely going to go down. Our traders are already in the sell. If you're not in the sell, you can look for an opportunity to get in. This one is not giving you the best opportunity to get in, but you can, if it makes a better flag, you can get it, right? We're looking for the sell, and the reason we're looking for the sell is this. We're expecting it to go tag the top, but you remember I said I would wait. If we're looking for the buy, we'll wait for this to happen, which means it has to do this, and then we'd look for that. Make sense? You're looking for a particular pattern. What I think of the random chart, we'll come to it. Let's go look at the random chart, and then we look at, I think it's better to take questions. So give you an idea where it's going to go and what it's doing. Let's see what the monthly structure looks like. I don't have the entire structure, but the monthly looks like this. I think we're going to get some more upside, definitely. Let's go. Take off everything. We're looking for upside, but this is what it could do. It could come here, come back down, and then go. See, we're getting some divergence in there. This structure is about to over, and that means we'll get a correction before you go. You would look for something like this before you go. Not this small one, a bigger one. And then you can take that trade. Right? If I get more data, I'll tell you very accurate, because I'm just telling you out of what is short-term trade, what is the more immediate short-term trade here now. Short-term trade, there's a buy set up here, but I don't know if you're in it. If you're already in the buy, you may get a short-term buy here. You have one on the 4-hour, you can see it very clearly. But it's short-term, it's very short-term because the structure is going to end very soon. This three-wave correction, which if you were an advanced trader, you would have to put it like this. You would have to fib this leg. This is the leg. This is the true impulse. Some traders like to start fibbing it from here as if this is the impulse, but that is not the impulse. They're fixing it to make it happen. The true impulse is actually here. And if you're pulling your advanced pattern, depends on, I don't know what you're going to look for. You would look for somewhere maybe 50, maybe 382, whichever you want. You'll look for it to come back here. You look for 50 or 618 or the 50 or the 786 for it to go, and you will not. It will not work because this is a very fast-moving market right now. So you wouldn't work. It wouldn't work here. If you start pulling it from anywhere in the middle here, you're wrong. You're actually doing it incorrect. You're just fixing it to make it work, right? Basically. So yep, some more upside right now, short term, but basically you have to start watching for downside. A deeper correction after this first move up. Yeah, potential and weekly, but you will have a weekly correction also, Ivan, and that means you will be stuck in the sideways for anything like about 3 to 6 months. And that will be a sell setup. There will be sell setups in the downside, the pullback. Right. Like I said, it's not that easy. It looks easy when somebody else do it like this, but it's not that easy. Right? It's the entire development of the entire structure as such, not just a part of the structure. You have to understand what you're looking at any one time and all the levels of the structure, the highest level to the lowest level. And if you don't know all of them, then you may be trapped in buying something that is about to turn. Right? You may take the buy and that buy may not go. Oh, the two types of regular flat. It's just regular flat in the Elliott wave book, but it's one where you have an A, B, C. This is a regular flat, right? But there are times when you get the A, you get an A, you get a B, and you get a C, don't come to the bottom, and then they go something like this. It is a flat 2, but it's kind of contracting. It's not really going, right? I don't, let me see if I can find one here for you. I should be able to. They must have one where the C wave didn't do what you were looking for, like very similar to this one, let's say, for example. You have an A, you have a B, you have a C, but the C never broke the top, and then they went down. Make sense? They're pretty common, by the way. Right? Is it wise and advisable to look for the wave pattern in 1 minute, 5 minute? You can look for it, but I wouldn't advise you to trade it because of the time factor. You have to make decisions in split seconds, which you're not capable of doing. I'm pretty well. There may be people capable of doing it, but I don't think it's easy to do. You'll be a nervous wreck after a month. Which Elliott Wave book you suggest? The Principles of Elliott Wave. It's on elliottwave.com free. What is the best time frame to trade, or does it depend on your style? Depend on your style, depend on your time, availability of time also. If you're available 2 hours a day, you may want to trade it daily. If you're available the whole day, you may want to trade the 1 hour. Wave theory equal Elliott wave theory, or is it the same? Not exactly the same the way we do it. Like I said, the wave theory is something I came up with, actually. The reason I'm amazed by people become wave traders, because the whole thing is Elliott wave theory. But because of what I am doing, I never call it Elliott wave theory. So not to freak out all the Elliott wavers who godly believe in the book, I tend to say we are wave theory traders. And then suddenly I see a lot of people trading wave theory who have no idea even what I made up. I literally made that up. I'm a wave theory trader, right? Because I don't want to say Elliott wave, because the Elliott wavers start coming in like crazy on me. So I said, oh, I'm a wave trader guy, not an Elliott wave trader. That's something I actually start saying. So it's nowhere. You wouldn't find that anywhere else if you look for it like as a way of saying that. I remember 1 or 2 Elliott wavers start coming crazy, and just to avoid them, I said, hey guys, I'm trading wave theory, not Elliott wave. And then people, then you got a lot of wavers came along. What are their concepts? I have no idea. Oh yeah, I'll have a lot of trolling for the next couple of weeks. Don't worry, I'm used to it. They're going to be coming at me for saying don't subscribe to people and don't do all that stuff, and don't they're going to come very strong. But hey, it doesn't bother me very much. It just the only thing that bothers me in that is that they make the site look very not nice. I like TradingView as a nice site and a very friendly place to be in. And when these trollers come, they change that concept of the site. That is why I think admin should do something more about it. Like, don't allow people who don't have a paid subscription to make comments. That's one of the things I think could stop trolling. Because if you pay for your subscription, they have all your details. They know your true name, they know your bank account, they know a lot about you, and they can block you permanently, right? Oh, I can't block them. That's the problem. That has to be done by admin and moderators. That's not something I have power over. And then when I tell a troll he's a troll, they block me. Right? I get blocked for that, so I stop commenting. You notice I stop really making comments in the chart itself, right? For that specific reason, because as soon as I write something, the trolls come in. Yes, the Elliott Wave Principles. Read the book, guys. Read, learn, and keep learning, right? So I've got people write me and say, well, they like what I do, but they may not be able to take my course. And that is okay. I'm not actually promoting my course here. It's for people who have the ability. If you have a $1,000, $2,000 account, you need not worry about it. You don't have to take the course. You can still learn until you get it eventually, right? I still think if you're new, you should not be trading live, right? That's the whole thing. It's about saving people who have small accounts from actually getting trapped by these guys selling them some stuff for $500 that doesn't work, right? So I think you got to be careful about that. If you're new, if you don't have 1 year experience in the market, don't buy any course anywhere, including mine. Don't come to me even, because that's the first prerequisite to joining any course. You should at least have a year experience in the market to decide whether you're capable enough of making a decision whether you want to be a trader. You can use a demo to test. You don't need a live account to test anything. You can use a demo. When you do back testing, you wouldn't even need an account to do that. How much knowledge do I have to have before joining course? At least a year experience in the market and a live account to trade. An account that is at least more than $5,000, which is an extra money for you, right? Any details about the course, add me to Skype. Let's not bore people here. People are here for different reasons. Let's help them here with different questions. Everybody know my Skype? Let me type it here for those who are asking, and let's go with more questions. That's my Skype. Let's go with the questions now. Another chart. We can look at a few more charts afterwards, but let's get some more questions first. Any more questions on whatever we have done for the whole week? And everything we have done for the whole week. Day trading, of course it works. That's what I do. I do day trading with Elliott Wave. We do day trading in our trading room. We did it live for some of you, right? We actually took some trades with you guys, you know. We showed you some trade setup. This is what I'm showing you on this chart. This is what I'm showing you. I'll have to remove this, guys, because it will not stay there once I start moving, right? I hope everybody copy it. On the New Zealand, this is day trading, right? This is simple day trading. You're waiting for a 1 hour flag. That is day trading, right? Monday you will get that trade. That's what we do. Monday you are going to get that trade. That trade is likely going to happen Monday. Can the structure change? Of course. Well, what if it goes up? Here's what you guys need to understand. So what if this goes up? Well, I'm not in the trade. My forecast is wrong. My prediction is wrong. It didn't do what I expected to do. I'm not in the trade. So what I'm going to do after that is I'm going to relook at the entire structure and see, did I miss something? And if I missed something, what was it? Or what is this structure telling me now? And what that structure is telling me now is what I will be trading, right? So here is a good example today on the Euro-Aus for you guys. By the way, a nice trade setup. The Euro-Aus, we're in our trading room, and the Euro-Aus starts to spike up. And one of my traders said, oh, should we go in a buy now? And I said, no. Who says you can go in a buy? Because it breaks the trend line? Because it breaks that line? Of course not a buy. Nothing in that thing told me it was a buy. And we said, no. Because it break a line? No, that's not a buy. That line is insignificant. We're still looking for the sell. It has to change the structure before you look for that. Are we getting a sell setup? Sure, we're getting a sell setup. You see what I mean when I tell you guys this? Be careful of the lines. The lines are insignificant. It's not a support and resistance line. If people come to tell me, but it broke your support line, I was like, I don't know. I don't have support and resistance in the chart. So I don't know what you mean by my support line, because I don't have a support line or a resistance line in the chart. That's not what I put those lines there for. The economic reports, I don't really look at news events. I avoid trading in very large, when there is a very significant news event coming out that could make the market spike up and down and go crazy and then go do what it has to do, I stay away from it. If I have a long-term trade, I just leave it where it is. Don't worry about it. If I have a short-term trade, I can either move to break even or close the trade and then go trade afterwards. I don't trade I trade technically, put it that way. If I trade during a fundamental news event, it's because I'm looking for a fast movement and a technical trade. That's all. What is the secret of identity? Well, you don't expect me to give you that one, right? I like that question. What is the secret of identifying one single wave? You're not expecting me to give you that here, right? No, we trade Forex mostly, but there are people in our group who trade stocks and indexes. And so there are people in our group who trade Nifty. I don't trade that, but we still look at it every day in our group because we have a lot of people who trade it, right? There are people who trade the Dow Jones or I think it's the S&P 500. I don't trade them, but we look at them every day because we have a few traders who trade them, right? We don't look at all the stocks. Most of my traders who trade those stocks, they're pretty much good to do it themselves. Do I have long-term investment plan? That's very long-term for now. I have plans like that, but very long-term, not so quick. You can find the book on elliottwave.com. Go to elliottwave.com, go to free resource, and then search for Elliott Wave Principles. I think it's there. Somebody will give you the link before we close. Somebody please help give him the link before we close. What is it? What is can you please explain divergence in the MACD? We don't, it's just divergence, just divergence. We didn't do that here. It's easy to see divergence, I think, you know. Hey, divergence, look it up on the internet. It's there. It's divergence is not what we do. Don't believe that is what we do. So if I got up, right, man, the difference between contracting regular flat and the other regular flat is C wave is supposed to break. Didn't go, it got, no, the C wave normally in a regular flat goes beyond the point of the A wave. If it doesn't go beyond it, it's still a regular flat by Elliott wave theory, but we could kind of, you can see that it's contracting. So you can call it contracting. We call it contracting flat. Just call it that to know what the difference between the two of them. That's all. So don't, all the Elliott waivers in here, don't start going on me that I'm changing your book, right? I'm changing the religious book and giving names to things that are not there. There's only, by the way, there's one single pattern that we've identified that repeats itself every time we see it. And it's not in the Elliott wave book. I can tell you that for sure. We have identified a pattern that repeats itself very often. I don't know, maybe it wasn't when Elliott was studying, he didn't see that pattern, but we start seeing the pattern. We start, my traders even give it a name, the AB squeeze. We've seen it so often and it behaves exactly the same way every time. And it's not in the Elliott wave book, right? So that is a pattern we trade very often too. And that pattern is very, very good. It really moves the way we expect it to go. We call it the AB squeeze. If you want me to show you in the chart, next time. Yes, yes, Dennis, you got it finally. That's it. It looks like it's contracting when you put the two line. A lot of traders sometimes I get trapped in that, believing it could be forming a contracting triangle as well. Instead, it's just an ABC and then they go up or down. So, okay, guys, a Friday afternoon. I want to thank all of you for coming. You've been very supportive of me. You've been, you've taken your time to come and listen to me. And I'm glad you're here. I hope to see you more in the future. We will be doing regular weekly webinars. Hopefully Monday is okay for you guys. We don't have to go back to the Fridays. Or you want it more on the Fridays, you can let me know. So I would see you not this Monday coming, but the next Monday, right? I'll see all of you there. Trade with care as usual. Keep learning. And don't forget to share the links, because if you do, somebody else is going to have access to the webinars. You can share the YouTube links, share it with your friends. It might save them from losing their account. So thanks again to all of you, and see all of you next week. By the way, the trade is going nice, right? So I would see all of you next week, guys. Take care. Bye-bye. Let me stop the recording.